you get a cleaner idea about what the market is gonna do next. So always keep this futures chart open. It will tell you a lot more about what you are doing. About price action and volume action. So what we are focused on is the volume action, right? There are about three elements, okay, which go into the makings of a chart. Price, the most important one. Supporting one is volume, and the second supporting one is time. Okay, and at different place, different days, different times of the session, and at different days of the week, each of these three play differently, right? So you know that between 2:30 and 3:30, because of the option plays and because of settlement pressure, because of this particular time, 2:30 to 3:30, the market works differently, right? And that point of time, the time becomes more important than price and even sometimes volume. But at certain times, let's say about 9:15 to 10:15, the volume component of the market is more important. A lot of traders are brought up into thinking that price is everything, and that concept is still there. Bhav Bhagwan Che, But Bhav is not the only Bhagwan. Bhav is not the only Bhagwan. There are three Bhagwans. One is price, one is volume, and the third one is time. And if you can pay attention to these three, especially as a derivative trader, you will cut out a lot of mistakes, okay, which you make in derivative trading. The whole idea as retail traders is to eliminate rookie mistakes. Before you start making money, before you actually become profitable, you have to think about how you're going to be eliminating your stupid mistakes. You get a cleaner idea about what the market is going to do next. So always keep this futures chart open. It will tell you a lot more about what you are doing. About price action and volume action. So what we are focused on is the volume action, right? There are about three elements, okay, which go into the makings of a chart. Price, the most important one. Supporting one is volume, and the second supporting one is time. Okay, and at different place, different days, different times of the session, and at different days of the week, each of these three play differently, right? So you know that between 2:30 and 3:30, because of the option plays and because of settlement pressure, because of this particular time, 2:30 to 3:30, the market works differently, right? And that point of time, the time becomes more important than price and even sometimes volume. But at certain times, let's say about 9:15 to 10:15, the volume component of the market is more important. A lot of traders are brought up into thinking that price is everything, and that concept is still there. Bhav Bhagwan Che, But Bhav is not the only Bhagwan. Bhav is not the only Bhagwan. There are three Bhagwans. One is price, one is volume, and the third one is time. And if you can pay attention to these three, especially as a derivative trader, you will cut out a lot of mistakes, okay, which you make in derivative trading. The whole idea as retail traders is to eliminate rookie mistakes. Before you start making money, before you actually become profitable, you have to think about how you're going to be eliminating your stupid mistakes.
Good evening, everyone. A quick sound check. Good evening, all. Am I audible? Great. So welcome back, all of you, to this Thursday 5 p.m. session. Today, we'll be going through the various features we have on the Vtrender Charts. And I have the Vtrender Charts homepage open on screen. And we can see the menu here at the top right. When I click the menu, we have these subsections of what all we have on the Vtrender charts. So we'll start with the market profile charts. We'll see how we can construct the market profile charts on different time frame, which will be the monthly, weekly, and daily. The default is the daily time frame, and we will see how we can get the monthly as well as weekly, and how we need to do it for spot as well as futures. Because spot, we follow the calendar week and the calendar month, which is from the 1st to the 30th and Monday to Friday, whereas in futures we follow the settlement pattern. So for a monthly series, we'll follow the Friday from where a new series is started to the expiry, that is the Thursday. But for a calendar month, it will be from the 1st to the 31st of that month or 30th of that month. So we have the market profile charts, when we have the order flow charts, which I'll run through what we do in an order flow chart and what are the features we use in an order flow chart and what will be the time frame which we use. Then we'll run through a quick run on the line charts and how it is used, especially in options, and more so on expiry days. It can be a very good tool to use. Then we'll come to the options table, and then we'll have a brief talk about the spectrum charts and the gamma re- reference which we have, which comes in very handy, especially on these weekly settlement days. So let us start with the market profile chart. We have the default market profile chart on screen right now. So let us see how we can construct different time frame charts. So if we go to the spot, we will have to go for this Nifty spot TPO chart. So in spot, why do we need to go for TPO? Because in spot we don't have volumes. So that is the reason we go with the TPO. TPO is nothing but time price opportunity, which is these half-minute bars. So every 30-minute time frame which starts from 9:15 is a TPO. So this A period till M period are the bunch of 13 TPOs we get for a trading day at present in NSE. So that is the reason if we need to select spot, we need to go for the TPO uh, version, and then we have these option at the bottom. We have the daily, weekly. This is the weekly series which I mentioned we use for the futures, and we have the monthly. This is the calendar month, and this is the monthly series which is again for the futures, and this is the longest time frame, the calendar year. So now if I want to see what Nifty spot is doing on the monthly, I'll have to just go to this monthly option and it'll throw up the monthly chart. So we did have a look at this monthly chart. I'll increase the TPO size so that we can. So we did have a discussion on this monthly chart on Monday, where we did a review of what we did in August and what we are expecting in September. So this is how we get the monthly chart on the spot. And then we also have a very good feature of having a dual window mode, which is on the top, which is on the right hand side. You have this, in case you have bigger screens, you can even go in for this 4 window mode, but ideally a 2 window mode would be the best. So what we can do is we can have a monthly on one side, and again we can have the weekly calendar on the other side, other browser. So this is previous week's profile, which got completed on 30th of August, and this is the current week's profile. So you can see how till yesterday we had formed a double distribution kind of a profile on the weekly, and what we have done today is filled up this double distribution zone. So if I just go to a daily chart of Nifty spot, even without anything else, just by using market profile, and based on what the open was today, we can just see what the setup was for the day. You can see how Monday and Tuesday we formed overlapping value, and we had two small A period selling tails. So what we can do is we can merge these two profiles because they had similar range, and this is the composite value which we got. So yesterday we gapped down, we made a gap down open, we hit this VPOC of 25095, and we kind of took support there, and we probed higher into the day. We had a spike into the close. 25192 was the spike zone, and we made a high of 25219, I think. So today, what was the open? Open, we did a gap up, but what we did was we got rejected at this POC. So in market profile, we have seen many times, I've shown you many examples how a rejection at one POC on any time frame gives a probe towards the next POC, which is on the other direction. So here, when it was getting rejected from this VPOC of 25260. The lower POC for us was this reference 25136. So when we got this open type as an open rejection reverse, we have rejected this value in this POC. It was all set for a tag of this VPOC of 25136. I will come to the future chart and then I'll show you in even in options how exactly this setup played out. So this is how we look at the market profile for the structure and see what the auction is trying to do. And then we decipher it further using the futures chart and the order flow charts to see how much of buy or sell volumes is coming in for the probable move to happen. So this was how we construct these spot charts. That is how we look at the monthly and the weekly, and also we have the bigger time frame of the yearly chart. So, and whenever we have overlapping values, we can form a composite. All we need to do is select the profile. I'll just unmerge this and repeat what I did. We need to select the two profiles and we automatically get this merge option on the bottom, and you just need to merge that profile. So this is how we do that merger. And now we have this AP rate selling tail today, and we have a tag of this VPOC where we have taken support. So today we have made a B-shape kind of a profile. So for tomorrow, we will need to see if this AP rate selling tail retains, and we will need to get accepted below this 25134. If we are below this, then we are looking for lower levels. So that is how the structure is showing of the market profile. Same thing, if we need to construct a futures chart, we need to go to just the Nifty. If you just select the Nifty, this is the continuous futures chart which you get. But because we are at the beginning of a new series, we are just 4 days old. So I'm going with this date series wise futures. So this is important when you are into a new series, because what happens in continuous, till last Thursday, we get the August futures chart. So here, if we select this date wise symbol, we will get what has happened in the September futures only. So this 29th profile is what happened in September futures, not in August. So which gives us the precise levels of where the volumes had come in September also, because this is an FA in September 25113. So this is one important reference. And just like I mentioned how to construct the weekly charts and monthly charts, because these are futures, we go by the settlement wise. So if you're looking at weekly charts, we will have to go with this weekly series WS. So when you take your mouse over to that, you will get that description. So for Nifty, this will be from Friday to Thursday. So when we select the weekly series, you get this. So you can see how last week's profile was from 23rd August to 29th August. So Thursday was the weekly settlement, just like how today we had the weekly settlement. So what this is previous week's profile chart. So why these are important, why we have the top to bottom approach at Vtrender is because we take references of the bigger time frame, so that we are clear about what the bigger players are doing and accordingly set ourselves up. So how this weekly chart played an important role even for this current week is, you can see how this POC of previous week was at 25168, and yesterday when we made that low, you can see how the low was right at that POC level. So this is yesterday's gap down and how we are taking this support here. In fact, Shai had mentioned that yesterday in the room also, when we are trading live, that we are taking support at the weekly VPOC. So weekly VPOC is a much powerful reference than a daily VPOC. And if we are holding that reference, that means that there is demand coming in there, and that direction in that move is kind of aborted. So that helped us to come out of shorts, because we did not see any break of this VPOC. And even in the order flow, when we saw red yesterday, it was more of the longs who were booking out, because it did not have any follow through, and we got back above VWAP. So this is how the weekly charts help us, and that is how why we have them marked. Even in our daily reports, we have a zone which gives the weekly levels, and we also have a link for these weekly charts. We have bookmarks which have been made, and those links can be handy in case you don't want to construct them by your own. You can just click on that link and open that particular time frame chart. So this is how we look. See, what we have done this week is today we completed the current weekly settlement. So you can see what we did on the first 3 days is form a 3-day balance overlapping value, and then we moved lower with this gap down. But we took support right at this POC. So weekly POC holding is definitely a sign that buyers are defending. In case we had broken this VPOC, then we could have looked for a probe in this singles. So that in fact stays good even for tomorrow or for the next week, which is coming, which starts from tomorrow. The weekly settlement in Nifty futures is from tomorrow. So we can have a look of how this profile develops. For now, we can see what the current week looks like. I'll just go back to the weekly series chart. And because this is part of the current week, I'll just merge this so that we can see how the weekly profile of the current week looks. So what we have done on the weekly profile is formed higher value, and we have this prominent POC at this 25337. And here we have taken support at this 25136. So these will be our zones to watch. This will be the support and this will be the resistance, and we can look for the auction to fill up this zone between these two HVNs in the coming days. If we get a sell side signal here, we can look for more downside. For upside, we will need to get a buy at this point, 25338. So this is how we these weekly charts help us. They also show us where the volumes on the higher time frame are coming. So this is how we can use them and have them in our daily analysis and put the levels which are marked as the reference to watch. And if it is a bullish profile, then the VWAP of that week also will be an important reference, because last week was a kind of a double distribution profile. So the VWAP of 25186 was important, and we have seen that it has not been able to sustain below this. So this 25186 and 25168 would be the levels to watch. And in order flow, if we are getting some sell side signals there, we can look for more downside. So this is how we use the higher time frame versions apart from the daily. So daily definitely gives us that latest data. So we can see how if we combine these 3 days, we can see, because they have overlapping value, we can see how the POC is at 25339. So today we have got rejected from the entry into this 3-day value. So just like what we saw in spot, we have seeing a similar kind of a move in futures. But in spot, we rejected from the POC. So we went on to tag the lower POC. In spot, we got rejected from the value. So what we did is we went on to test the value of the lower version. So you can see how neatly the market profile is showing us this structure. So we have taken support right at this value area high. And what we have done is we have filled up the gap zone. What happened? So again, just like how we could make out on the weekly, even on the daily, we can make out that this 25195 on the downside will be the support, and this VWAP plus this POC will have to be the one which will have to be taken out, because we have an A period selling till today. So this is as far as the market profile charts are concerned. And next, let us move on to the order flow charts. So in market profile chart, one more uh, feature I would want you all to know is how we can add these KRL levels. What is a KRL? KRL is a key reference level. So when we identify some certain important days in the auction, for example, 2nd of September formed a new swing high. We made a high of 25420. It was an all-time high, and it is also a swing high because previous day and the next day both made lower highs. So from that particular day, what we can do is, just like how VWAP is important for a trend day or a neutral extreme day, when we are making a new swing low or a new swing high, we can add KRLs, key reference levels. So for example, 14th of August was where when we made a new swing low in Nifty futures. So I'll just quickly go there, and you can see this was a new swing low, and we have also seen an A period buying tail. So this was telling us that the demand is coming back. So at this, how to add the KRL, you just need to right click on the profile, and in the drop down you will get this create custom KRL. You click on that and you choose anchored VWAP. So this is from a swing low. So what we'll do is we'll have it as a green colored dashed line, so that we know that this is indicating support. So you need to select and save this. So what this does is, from that swing low, it marks you the anchored VWAP. So why do we put this? Because when we have identified a day from where a new IPM or a new initiative buyer has entered, it is important us to it is important for us to know where the VWAP from that day stands at, because that reference would be defended by that buyer. So if that buyer is still in play, that VWAP will have to be defended. In case we break that VWAP, then it means that buyer is now negated, and that trend up what we are looking at is over. So you can see how this anchored VWAP from that 14th of August yesterday came to 25197. So this anchored VWAP is a swing one. So we do not we look at it more as the end of the day reference, not on the intraday basis. On the intraday, we definitely see what it is doing there, because yesterday we did break this on multiple TPOs, but at the close we could move away from here and we closed well above this. So in fact, we left a pullback low right above that, and that anchored VWAP also became the VPOC of yesterday. So this is where the market profile references combine and they give you more important levels. So now this anchored VWAP, as long as this is holding, you can say that the buyer who had entered is still defending his positions. So he may definitely have booked out and booked profits and holding lesser sizes, or he may have re-entered on dips. But this anchored VWAP being defended means that the buyer is still in play. So similarly, now we know that we have made a swing high on 2nd of September. So from that level, we can make a new anchored VWAP, and this will be from the swing high. So we will have a red color for this. So these are cues which you can use. These are features which you can use on this market profile chart to understand what the longer time frame is doing. So here you can see this anchored VWAP from the 2nd of September is at 25260. So you can see how at the close we were not able to close above this. We have closed lower. So this 25260 on the upside and this 25202 on the downside would be the level we need to watch tomorrow and on closing basis, because this anchored VWAP buying anchored VWAP test left a period buying tail, and this anchored VWAP selling reference left a period selling tail. So that is how we will need to see on a closing basis. If we are able to close below this, then we can say that the seller who had come in on the second is now in control, and that buyer is now come out. So then we can look at more lower levels to come in for the Nifty futures, and we will keep trailing the references to the current, the latest information. So for tomorrow, this VWAP, which is also matching with that anchored VWAP, yesterday's VWAP is also at the same level, and this selling tail will be the reference. So in case we break below this POC, and we had seen how the weekly POC was at this 25168 level. So if this breaks, then we are looking for more downside. So this is how we'll need to use these KRL references. They are a very handy tool, and it definitely helps you to have them marked on the chart so that you can know which of the buyer or the seller is dominating or is currently holding the auction in their favor. So this is about the KRLs. Let us now move on to the order flow charts. So order flow charts is the uh, pulse of our process. So market profile gives us the structure, makes us understand what the auction is doing, and it gives us the references also. Whereas order flow shows us what volumes are coming in, how are the volumes, good, bad, average, very good, and then the signals tell us what trades we need to be taking up. So I'll just quickly shift this to the 15. What we do at Vtrender in the VMR is we follow the 3-minute and the 30-minute order flow. So even in this, we can shift to the 2 window mode. just like we did for the market profile. And on one side, I will have the 30-minute order flow. And on the right side, I'll have the 3-minute order flow. So what we do is we have this open, and then we see for the on the 30 minutes, we have the bias as per the 30-minute chart. 30-minute order flow tells us what the auction is doing on the bigger time frame. So, and the 3-minute, we look for signals to come in so that we can take a fresh entry and take some new trades. So those trades will have their stop loss and the objectives. Once the objective is hit, we'll trail to cost, and as long as the signal is valid, we will keep holding the position. So we have initiative buying and initiative selling signals in order flow, which we have already discussed and shown in our previous sessions, which we use to uh, take trades. So RB and RS are responsive activity. So we use them to book out and to see if the auction is uh, at the phase of closure in that direction. Whereas in when we get initiative buying or selling, then we are looking for a new imbalance and accordingly uh, place ourselves in that position and take trades in that direction. So in this live panel which we have on the order flow chart, you can see we have the speedometer, which is a very important feature again, because it tells us how the volumes of the day are. So ideally, we would want these volumes to be in between 100 to 150 when we are taking any trades. That means that liquidation is good for that day, and if any signals are being generated, they can give you the anticipated targets. Whereas if the volumes are low, then the range also will be a compressed one, and the signals also may be a low volume one, which may not give you much, and you should be happy with smaller points when we are taking any trades. So then, and we have the 10 bar cot, which we watch this for both 3 minutes and 30 minutes. And in case we need to go for a long position, we would want the 10 bar cot on both these time frames to be green. So now you can see both are in green. The 3-minute one is marginal green, and even the 30 minutes is not as not too bullishly green, but yes, for now both are green. And so if we are getting any IB signals on the 3 minutes at tomorrow open, then we'll definitely be more biased to take a long trade. If the same 10 bar cot was showing us red, and then we would look for IS to show up on the order flow charts for us to take trades in that direction. So what this 10 bar cot does, it helps us to remain in sync with the what the bigger time frame, bigger players are doing. So we would not want to go against them. But and even if we are taking a trade against the cot, we would make sure that we are taking it for a very small contra position. So we are very quick in booking out. For example, we take a long trade when we are below the VWAP, because we have got a good RB and an LLT. We would definitely book out at the VWAP of that day. We will not, because we are going against the trend and the main signal. So that is what we need to keep in mind. That is how this order flow helps us to be in sync with what the market is doing. If we are going up on red negative cot, then we will be little skeptical about holding longs. If we are even if we are in a long position, we would want to book that out. What I'll do is I'll show you an example of Bank Nifty's 30-minute profile chart of day before, and we'll do the 30-minute version, because that will help us to see how this 10 bar cot is the latest one. So this will not be, so you can see how in this K and L period we spiked higher in Bank Nifty, but you can see how this big move, this big green bar, had more of aggressive reds. There is not even a single green except for this 155 at the bottom, but in on the sell side you can see lot of aggressive reds. And if you see the cot here, the cot is a big deep red of minus 11,658. So even though we were all trading a long call position when this setup was happened, and this was thanks to the Fin Nifty expiry that day, and 23,700 call was where it started, and it moved on to the 23,800 call also. So in Bank Nifty, we got this move, and you can see very clearly how the cot is deep red, And although we have closed at highs, we have done is the POC has shifted to the top. So when we are seeing this in order flow, this is a very good signal for us to not hold on to the longs. We all of us in the Vtrender booked out our longs because we could see that the up move is come on dark red caught, and sellers have just piled on here at these new highs for the week. So it was not at all a surprise that we opened lower the next day. So that is the reason this VWAP of that LTPO is still not been able to be taken out. So this is how order flow helps us. This is how COT helps us. It is, we don't use order flow as one single indicator. We just don't use the IB or IS in individual as an individual indicator, or just the COT. It is a combination of all these factors. We need to have COT in sync. We need to have the 10 bar COT in sync of both 30 and 3 minutes, and then we need to have the IB signals. Just because the COT is green does not mean we'll go long. We will need to get that IB. So when we see a IB green bar at VWAP, that we know that is a long trade. And it was only when we started moving higher is where the red started to pile up. So we will have to be very skeptical. And before that, you can see how on the same day we had some good buying. On the same Bank Nifty order flow chart, we will show why we were biased on the upside is because when we dipped lower, you can see how this big greens had come in. We had this 1,147 green at 51540, and the low of that day I think was at 51,525, which was a failed auction. At that point also we had an 800 buyer there. So this showed us buyers coming in at an important reference on the weekly chart of Bank Nifty futures. We had a VPOC. So what I'll do is I'll just open that because we are talking about this. I can show how these market profile references and the order flow references get together. So we're talking about Bank Nifty profile. So we'll go with the Bank Nifty September series, and we'll go for the weekly series chart. So you can see how this previous week's POC was at 51514, and that is where that buyer came in the order flow chart. When we are talking about 51525 was the low we made on Wednesday, and we got good buying over there. So that is the reason we are expecting this move to happen, and that spike came in. But in this spike, the order flow showed us that the sellers are coming back. Whatever buying had come, the buyers booked, and after that the sellers took over and they uh, added on in this zone higher. So that is the reason we need to go in with all of them falling to in place together, and that's what we do at the VMR. We are able to make out when everything is in sync for that move. So in case there is something missing and something is not adding up, then we'll wait for the setup to mature, and then we will look to go for trades. So this is uh, as far as the order flow is concerned. And as I said, we can use the two window mode in case you want to watch two instruments. You can watch Nifty on one side and Bank Nifty on the other side, both 3 minutes. That's what we do in the room. We have the 3 minute Bank Nifty and the Nifty order flow running, and the 30 minutes we have it running on one tab on our system, so that we keep having a look at what the 30-minute reference is doing, because 3 minute is where the action happens and what we watch while taking and executing trades. So coming back to the menu, the next are the line charts. Line charts are important tools, as I said, especially in options, wherein it tells us, I'll just take an example of 25,200 put of today Nifty. So what we have in the line chart is it shows us the price, which is these candles, and it shows us two very important references of market profile, which is the POC, which is marked in this pink, the pink bold line, and the VWAP, which is the green band, which is moving. So options based on where the POC and the VWAP of the previous day is and the current day is, it tells us if the open interest, the writers are uh, better off holding that, or there is some kind of a sign where the writers could get into trouble. So you can see how this 25,200 put was inviting selling. How can we say that? Because this open interest is rising and it kept on rising. There was one swipe here in the morning when we dropped lower, and you can see how from the POC we moved higher. So this line chart give us the previous POCs and POC levels, which are the probable objectives whenever we are getting a move in that option. And whenever we see a move away from the POC and VWAP with a green bar, we uh, we can say that those option writers are running for cover, and it can go for the next POC as the target. So you can see how the green spike tells us that OI is adding here, and how this move away from the VWAP is showing us a red OI spike. That means the OI has dropped. So this is how we look at the line chart, make use of the line charts. And you can see here into the close, the open interest kept rising. And this last fall, which you are seeing, is more the writers covering rather than the uh, uh, squeeze happening. In Fin Nifty, the chart is not there, else I would have shown you that chart. In Fin Nifty on that day, we could have seen the open interest went up till I think 2 o'clock. And once the price went above VWAP, it never came back below it, and it kept going higher, and the open interest kept falling lower. And you could see this red spike all through. So this is how we use the line charts. And more than the line chart, the gold mine of the Vtrender charts is this options table. So in this options table, we have everything in available to us in one single click. So we have all the options, all the strike prices. We have the straddle market profile in the line charts to see which straddle is being hit. For example, today 25,200 was the gamma zero level. I'll come to the spectrum charts and show what the gamma is and how we use gamma in our everyday trades. So this 24,200 line chart, if we open, it will very clearly show us. So this is today's open. I'll keep it just to today's day so that we just focus on what is. So how this helps us is you can see how the open interest has been rising from morning into the close, and how the price from morning it remained below the VWAP and POC, and the POC and VWAP kept dropping, and even this there was some moments where it came tagged that POC and VWAP, but again it started to fall. So went on to the POC also kept shifting lower, and the writers who came in at this level in the morning at 120, they went home at this 54 level. So this is how you can use this line charts to see what is happening in which particular straddle. We can also open strangle charts. You can select which CE and PE you want to open. So for example, we want to look at the 25,300 and the 25,100 call and put. So you need to select this checkbox against that strike price, and then you get this uh, link at the bottom, open chart. So this is the pair of 25,300 call and the 25,100 put. And this is the market profile chart of that particular strangle, and you can see how we are below previous value. So it is a sell with the stop loss at this POC or the VWAP. And the same thing, if you want to look at the line chart, you have the option at the bottom right. You click on the line chart and you see what has happened in this option. In this triangle, you can see how the open interest has kept on rising, and we remained below this POC and VWAP all day. It did manage to get above the POC at this 10:30, but here at the VWAP it was holding, and it went on to close at the lows. So this is how we can make use of this line charts, and in the option table you can open any particular straddle, triangle, or a market profile chart of that particular strike. And you can also open the individual uh, option charts by in one click. The market profile chart, you have the symbol ABC, and the line chart, you have this symbol of the line, the icon. So the left side has got the calls, the right side have got the puts, and this is how we need to go in for this. I'll show you one small example of the 24,500 put. Before that, I'll quickly go to the spectrum charts, and we'll see what the spectrum chart is. We have spectrum charts, we have the option strike, we have the NTM OI change chart. So we what we do in the room, and we also suggest to guys who are using Vtrender charts, is to go in for this NTM OI change charts. So once you go this, you select Nifty, you will get this spectrum chart. This is our proprietary spectrum chart. What it helps us to see is, you can see the feature, what the highlights are given at the bottom, what all is there, and you can, I'll just switch them all off, and we'll go one by one to see what all it shows. So this is the spot price. So spectrum is based on spot, and this tells us what the inventory is being doing for that particular weekly settlement. So it's a very good tool to have, and it helps us in lot of ways, because it not only helps us to understand what the range of the weekly settlement is, and we also know if it is getting to one end of the spectrum, we can expect a reversal, or if we are getting an IB at that end, we know when you can get those Dukan trades. So for example, in FinNifty 23,700 was the gamma zero level on Wednesday. So when we got an IB at VWAP in the K period, we knew that the gamma zero call writers could get punished, and they did get. So that is how this gamma helps us. Let us see what all we have in this. So we this Nifty spot price is there, and we have the put open interest and the call open interest, which is added. So the green line is the call open interest, which is added, and the put is the pink is the put open interest. So you can see how today it was more the call open interest which got added in Nifty. So because of which we know that the bias was more to the downside, and it also confirmed with that A period selling tail which we had. So now we know that it is the calls who are writing, so we need to look more for the downside. And then we have the MVs high and MVs low, and then the more important gamma levels. So I'll just, the blue line on the top is the gamma zero, which was at the open at 25,400. So you can see how the gamma zero at open today was at 25,400, and the gamma lower range was at 25,000, and the gamma zero was at 25,300. So what it helps us to do is, in case you're looking to trade in long options, what we generally do is go with this range. So if the upper range is 25,400, we look at the 25,400 put as an instrument for us to go long if we are getting signals to short Nifty futures. And on the call side, we will look at the 25,000 call. So this way we also know the range. The range for this would be the maximum 25,400. The higher range it could give me today, because of this lower range being at 25,000, was 400 points. And similar thing is in the 25,000. With this gamma zero being one important level to watch. So for example, if I am long and if I get an IB signal in the order flow, and if I'm trading the 25,000 call, I would look at targets of 300. So that call ideally would give me around 290 to 300. So I will definitely want to part book at that level. And the next target, because the spectrum range is at 25,400, would be the 400 mark. So using this, I will now come to what we did in the how we got one good setup in the 25,400 put. So the upper range was at 25,400, and we already discussed the Nifty spot chart. I'll just quickly open the Nifty spot chart. of how we saw rejection here, and we were expecting this as our target. So if 25136 is our target, what would be the target we can expect in 25,400 put? 264, correct? 264 would be the target, and because today's settlement that it will not have much of premiums. So now let us see what the 25,400 put did today. So if I open this 25,400 put chart, I'm just opening the market profile chart, and make sure when you're watching any chart which has got volumes, you always go with this volume based value area. The TPO based value area is only for spot charts. So because they don't have volume, but when we have volume, we want to make use of the data which the volume is giving us. So we definitely will go with this volume based value area. So what we did was, you can see how we got rejected at a POC higher in Nifty spot. Here we are getting rejected on the downside in this put from this 161 level. So when we are getting this buying tail in the put, we know the PLR, the path of least resistance, is to the upside. So as per our spot, the target would have been 264, correct? And see how we made that seaside extension right to that level of 264, which was also the halfback of the previous profile, yesterday's profile. So this is how everything falls in place, everything gets in sync when we are using market profile and order flow. And in the order flow, if you see the 3-minute order flow chart of this put, we got a buy signal, I think around 190 in this put. So that from 190, we could go on to expect this target of 264. And because this came in a seaside, we have a very special seaside setup which tells us that the seaside we need to book out. And you can see how we made that high in the seaside, and that high never came back again. So the objective was done in the morning itself, after which we just formed a narrow range balance for the rest of the day. So I'll just quickly go to the order flow chart of this particular put and show you what the trade was at the open and how we could have used order flow along with the structure we saw in market profile to take this trade. So this was the opening order flow, and how we probe lower at the open. We made this overlapping RB bars here, and immediately in this bar, the 924 bar, when it moved above this VWAP with a green bar, you can see zeros in this order flow. Zeros in order flow also are a very important feature, and depending on where they come, they act as support or resistance. So what we do here is, when the start of the zeros becomes an important support. So this 180 level was our support when we made this green bar above VWAP. So this is telling us that the auction is now moving lower in Nifty futures. And as we already saw that 264 objective in this put, we could take that trade with the stop loss at 180. Why? Because we have got zeros and we are above VWAP in this option. So whatever writing which may have come in at the open is now out. So with this as support, you go look for that as your objective, and you can see how we went on to make a high of 230. We came back lower, but this low was held at VWAP. The VWAP was not giving a gate pass to the sellers. We made an RB at VWAP, and the dip again we closed above VWAP. So with that 180 as the reference, we went on to tag that objective of 264. Here we can see a high of 261.9, but in the trading terminal, the high was exactly 264 today of this option. So once this objective is hit, we have seen an RS, you know that now you need to book out. And VWAP will still be your reference, because the AP rate selling tail is still not gone. It's still not negated. So whenever we are getting a dip to VWAP, this put again becomes a buy trade with the stop loss right at that 180 level. And you can also use this NPOC of 206 as your reference on the downside. So you can see how we did break below this VWAP. Again, we have got an RB bar. So these are references which are there from the morning, and we know that this is a dip buy candidate because of that AP rate selling tail. So this was actually a very good signal to enter again to this into this put with a very small stop loss, and because we knew what had happened in the morning, so this again went on to hit that high of 260, I think. And you can see how these NPOC, the RB which we got, and the VWAP was holding, and into the close we again went on to hit that 259 target. So this is how we make use of the market profile and order flow, and individually how we use order flow on the options chart. This is what we do. So coming to the spectrum chart, what we do is we see where the gamma zero is and where the range is, and as per that we look for taking trades. On a weekly settlement, we focus more on the gamma zero level and see how much the OI is building. Today the OI was building up in both 25-200 and call and put. So it was very likely that we will close around the 25-200 mark. But more so, the call side was more dominant because we had that selling tail. So that is the reason the call had lot of open interest, and you could see that in the OI which is rising. So this is how we do. And in case on a settlement one of the writers of put or call are getting into trouble, it will shows up as the line starts to come lower. For example, the call open interest which you are seeing here was similar in Nifty on Wednesday, but after 2:30 that green OI started to fall, and it in fact kept falling into the close. So that is how we use these spectrum charts and make use of them in trading. So the gamma zero is a very important level. In case the gamma zero is fixed and is not moving, it is very likely that we will close around that gamma zero level, fixed and not moving for the last 24 hours. So that if these are new positions and if this is a new level which is marked, that means the players have entered now. Else you know that the players have been building position at that level from a longer time frame. In the weekly settlement would be 3 to 4 days. So that is how we look at gamma levels and make trade them using the options chart. So this is these are the features which we have in the charts. So we have the same thing for Bank Nifty, Fin Nifty, and Mid Cap also. And we have the strike-wise gamma charts. We have lot of tutorials in the Vtrender section, and we also have lot of help videos in the Vtrender chart section, and also lot of videos on the YouTube channel, which you can look for each particular section if you want to know more about them. So that is it from my side for today, guys. In case there are any queries, I'll be happy to answer them before we can wind up for the day. And all these things, all these features, the market profile, order flow, line charts, gamma levels, we use all of them when we are trading live in the VMR, the Vtrender mentoring room, and we look at catching these setups, and we help each other. All of us contribute and keep talking about what are the probable trades which we can take. And when we see all of them matching, falling in place, we go for these trades. The yellow lines or the spectrum chart are the MVIS lines. It just gives us an indication if the spot is bullish or bearish. If the spot is below these MVIS lines, then it is weak. If it is above the MVIS lines, it is bullish. Strike-wise gamma charts and EVs chart, you have videos on the YouTube, but maybe later on we can have one session on that. Definitely, guys who want to join our Vtrender mentoring room, you can log on to our website vtrender.com. We have the description of the Vtrender mentoring room there. You can go in for a monthly subscription to see what it is, and then go in for a longer plan, because this is not something which you can learn and start implementing in a week or a month. It'll take time, but for you to start any day is good. and you need to just keep building on the process. So you for any queries, you can DM me on X. My ID is open at Uttam Goel, and we can clear any queries you have regarding the VMR or the charts. If the price is between the two spectrum range, then we are in a narrow range. We don't we are range bound, and we just wait for auction to show us some imbalance. When it is between the range, it is a perfect time for option writers. That is where those straddle charts will make you money. So looking at the spectrum, we know when we need to be long straddle, short gamma, and when we need to be long gamma. Fine then, guys. So thank you for joining in. There's one more question from RK. How slow and fast days? That I showed you the speedometer on the order flow charts which we have. So when we have low volumes and we are in previous days range, we have something called the open type which we identify in the first 15 minutes. So that will help us to understand what kind of range we can expect in the day. And the speedometer, as long as it is below 100, you know that the range cannot extend much. In fact, in Bank Nifty, I think today was one of the lowest volume we have ever clocked. So the speedometer was below 50, in fact, in Bank Nifty today. So those are the days we know that we need to stay away from trades. And on Wednesday, when we got that spike higher, we got that volume burst. So we saw that in order flow that the volumes have increased. So we definitely follow that saying that volume precede price, and whenever we have the volume surge, especially in the TPOs which we mark out the K period on an expiry day, we give lot of importance and we are extra alert on that time frame. So when we see the volumes coming in and we get the IB signal on the order flow, then we know that this is the trade we cannot miss. Fine, guys. Thank you for joining in. Then signing off for today, and let us catch up again next week with another such session. And as I mentioned, in case you have any queries, you can please DM me on X. Thank you and have a great evening.